Good afternoon, investor and corporate. Welcome to SET Digital Roadshow Year's End 2023 Performance Review. This session will run about 45 minutes, including Q&A. Company will start the session by 30-minute presentation, followed by 15-minute Q&A. During Q&A, investor may leave your question in meeting room chat box or use raise your hand function. We will open your microphone so you can ask the question to the company directly. May I now invite Thai PLASPAC Public Company Limited to start the presentation.
Thank you, Swadikap. My name is Vishal and I am the Group CFO for Thai PLASPAC. We welcome you all to the Digital Roadshow for full year 2023 and also for Q4 of 2023. Thank you once again for all of you for joining us today for this event. So, as you all know, we have 45 minutes for this session. I would like to take you through a brief presentation on our business. Just a quick overview on who we are for some of the people who may not know us as well. And then we would like to spend some time to go through some of the important developments that happened for TPAC in the last year and in the quarter. And then we will open the floor for any question and answers that you may have for our business. Thank you so much. Starting with, this slide 5, I think this is a recap for some of you, but just to present who we are as a company. TPAC is a specialty packaging solution provider with almost 90% of our focus into the food and pharma segment, which requires a very high degree of hygiene and ultra high clean room kind of an environment. It is with such stringent requirements that we operate our business, and that translates into the best in class gross margins for our business. The fact that all our products today from TPAC come out of a design lab, which takes at times years in customized development that we do for our customers who have stayed with us for more than decades in many cases. Speaking of customers, we have a diversified pool of customers across 50 countries, close to around 1,500 customers, and some of them including the blue chip MNCs, which have been with us for now multi-decades. Our presence today, in terms of our manufacturing footprint, is by and large on the emerging markets. And this also gives us an added benefit because these are the geographies where we see the growth to be at a much higher order than the rest of the developed world. So we are present today in India, Malaysia, UAE, Thailand, and now also Philippines. I think last but not the least, we also have made conscious choices towards ensuring that whatever we do today has a long-term sustainability angle. And that is why we have made sure that all our products today are 100% recyclable. And to that extent, we are only dealing with polymers which have proven mechanical recyclability. Go ahead. This is just for you to give a bit of a historical perspective. Thai PLASPAC, as you see today, has a history of more than 4 decades. Long back, it was incepted by a erstwhile Thai family. And then in 2016, we have had a new leadership installed with a change in ownership. As you will see, with the coming of the new owners and the new management, a new life was instilled in the company. And then the company remodeled itself from a local Thai company now to an international global company. Go ahead. I think the first step that the new management and the shareholders did after coming in 2016 was to do some deep strategic thinking on what would be the future of TPAC. How would we want to see the growth of TPAC in the next following years? And that is where a lot of time was spent on making certain strategic choices in the first 2 years, which today define who we are which we proudly claim today with a lot of humility as the Asia's fastest growing packaging company. I think amongst many choices that I have spoken about also in past, the few of them too important to highlight is the fact that we took a choice to keep ourselves focused on only emerging markets. We decided to be in rigid packaging, which is the most sustainable packaging in our view. We also took our choices around the segments we are going to play, which it's not easy for anybody to enter. So that brings in that entry barriers, that brings in those customer stickiness. We ensure that we are not leveraged on the revenue map by having only one or two customers will dictate our entire fortune. So we have a very, very diversified customer base. And most importantly, we also realize that it is important to go international, and the company took an M&A route, which you will see we have mastered over the last 5-6 years in terms of our growth strategy. Go ahead. I guess the 2 years from 16 to 18 spent in ideating, strategizing. The next 5 years were all about execution. This is not a new slide. You have seen how we made M&A an engine within TPAC, and one after the another, we kept on acquiring companies, getting into new markets, and most importantly, drawing synergies out of it. And that is translated to who we are today. We also not just acquired businesses to get revenues, but we also managed to grow them substantially after the acquisition. And that is evident from a lot of investments we have done organically into these businesses that we acquired over the last 5 years. Go ahead. I guess the results are in front of us. In a matter of 7 years, a company has expanded 5x of their size. That's a huge scale growth that we have demonstrated. We have expanded into 3 new geographies. We have gone into India. We have gone into further penetrated into the ASEAN region with now presence in Philippines and Malaysia. And we also touched the UAE market. And now from where we are serving not only the Middle East, but even the Africa market. 3 plants which were there when we came in have now translated into 17. 8 countries which were being served are now being served. Now we are addressing almost 50 countries. Our products go to 50 countries, and the talent base also tripled from 900 to 3,000. Today we have people from almost 10 nationalities. And last but not the least, equally high emphasis placed on corporate governance, and the fact that we came in from an MAI to SCT is also testimony of how the company has grown. Go ahead. This is a snapshot. Now we have combined, different slides to just give you the key message. Today, just to reinforce the part, TPAC is a very specialty focused packaging company into food and pharmaceutical segments. With marquee world-class customer base, many of them sitting with us for years and years, and us serving them from 5 geographies with 17 world-class plants. Yeah, go ahead. This slide kind of gives you a sense on how our strategy is. So our strategy in past and even in future is going to be a mix of organic and inorganic investments. Our philosophy towards an organic investments have been that we would like in each one of our geographies where we are present, and where we also are by far the market leaders in the segments where we are present, we would want to grow at least 1.5x the growth of the market in that particular geography. That's the philosophy which has made us the Asia's fastest growing packaging company, and that's something which we wish to retain. So directionally, that's what we always aim for. Directionally, that is what we will aspire for each one of our geographies where we are present. As far as inorganic growth strategy is concerned, we believe there is a unique proposition we bring to most of the family-owned companies, and in terms of how we partner with them, how we work with them after we bring them into the TPAC family. The next decade is going to be a decade of opportunities. It's going to be a decade where many of these family-owned companies in these geographies are going to look for a more matured company to come and partner with them. And that is where we come into the picture. And we believe with such enviable record of us doing M&As and creating value, we will be able to continue to invest inorganically to grow our business together with the organic investments we are cutting. Go ahead. Now I'll come quickly in terms of the key business updates that happened for us during this year. I think the first important one relates to the India market, which I know many of you guys are very excited about and also continue to keenly observe. So on the India side, we had embarked 2 years back building 2 new infrastructures, one in the west and one in the north of the country, because we wanted to be ready with such world-class infrastructures to be able to bring more machine capacity as the market was expanding and growing. We were happy to tell you that last year, starting from 2023 itself, we could get these 2 infrastructures completely ready and commence operations. As we speak today, these 2 plants are now fully, I would say, capitalized with machines, and now we have been almost running them at par with the utilization of the rest of the India business. Very importantly, other than our continued investments into machine, we added 2 very high capacity European machines platform later last year, and these 2 machines have the capacity to almost add another 8 to 10% to our total India capacity, and we are very bullish of the fact that with such kind of high capacity machine coming into picture, it will pave way for our organic growth in India in times to come. Go ahead. Not just our India operations, even what we acquired in 2022 of our southern operations. If some of you may recall, we had acquired a company in FY22 in south of India, because that was one area where we did not have a manufacturing presence. So we acquired a company called Skypet, which also has enhanced its capacity, its operational efficiencies in a matter of 1.5 to 2 years. I think the numbers speak it all, and I'm very, very glad to tell you that since we had purchased that company to where it is today, we have been able to draw almost 60% growth in their EBITDA through a series of initiatives, such as adding more infrastructure capacity, adding or doing automation initiatives to bring down the cost, and also procurement synergies. This is a live testimony, the most recent testimony of how we are able to draw value out of our acquisitions. Go ahead. This is something which all of us at TPAC are very, very bullish about and very excited about. We had also appraised you of the fact that we had set up a new greenfield company, which also gives tax benefits for setting up new manufacturing in the country in India. We had set up a new facility called TPAC Customs, and this was tailored in for a very high value add caps and closures segment. We are very happy to again announce and tell you that the facility is all ready, and we are going to be commencing operations and revenue generation from Q1 of this year itself. What's really unique about this facility, as you can see somewhat in the pictures, is this is a 1 step above than our existing infrastructure in terms of the clean room and hygiene kind of an environment. We are now first time in TPAC Group operating on a 10,000 clean room class 10,000 clean room for our assembly and packing area. This is not something available in any of our existing facilities. So you can imagine with such kind of infrastructure, what the demands of the customers would be that we have placed these kind of infrastructure in place. We are going to be serving to some of the world's topmost pharma clients in India and abroad. Many of those who have already audited and certified our facility, and as we speak, more audits are in place. So we have now a separate independent management team, comes with dedicated experience and exposure into such fields. The pipeline is very strong, and in coming quarters, we'll keep you updated on how we see the growth of this particular business. But this is one area which basically it's clearly an evolution of how company is continuing to move up the value curve, where value of the product is much more than the volume it brings in terms of the tonnage or kg. Go ahead. I think this is again, a proud moment for us. We had told you we are getting into an international geography first time organically in a greenfield way. This is a picture of our Philippine operations where we had set up a factory in record time, basically following one of our customers who happens to be one of the fastest growing dairy companies, with also a dazzling IPO that they had come out with. It's a Malaysian dairy. I'm not at a liberty to name them, but I guess many of you would understand which company I'm talking about. So they decided to set up operations in Philippines, and they asked us if we can follow them and be their exclusive supplier. And they came to us in the middle of last year, and in record time we set up a new company and set up these operations with now a local management team with a business head fully in place. We have got all the licenses, registrations to run the factory now. And we are extremely proud of the fact that first time ever in the history of Philippines, a packaging company has obtained a BOI certification, on account of the technology that we are bringing to that geography. So this is also a marquee event in the history and milestones of TPAC. We are expecting the commercial production to start sometime around April. It's linked to how our customer plan would be. But yes, we have all the capacity in place to serve to their requirements and their future requirements and growth. And we are also very happy now that we have started to receive new customer inquiries from MNCs, which we are going to also start to work upon in the coming quarters. Yeah, go ahead. I guess this is a showcase of how TPAC is now making its presence felt through a very strong presence afoot, in terms of global exhibitions and seminars. This was not something TPAC used to do, but now we started experimenting with it in the later half of 2022 and more strongly in 2023. As you can see, it's a TPAC booth that you see, and where we bring the best of the entire group, all the technologies, all under one roof. We have done these exhibitions in China, Thailand, Middle East, India, Africa. And what's very, very encouraging and positive to see is now these investments into exhibitions have started to see some real solid gains through customer inquiries and also translating into revenue generation. So we are very confident that we are on the right path doing this, and you will see more and more of on the international arena, showcasing the best of what we are doing as a group to our customers, existing and new potential ones. Go ahead. Not just growth on the top line, or rather one of the other initiatives in terms of our customer centricity is the CRM implementation also that we spoke about. So the teams have been working over it with a global vendor, and we are happy to say now that we are at good advanced stage to having done the discovery phase, and now we should be aiming towards the completion of this project in the next 6 to 9 months in terms of a rollout across all the TPAC geographies. So this initiative will allow us to be more closely connected to our customers, to have more intelligence on how our customer requirements are changing and evolving, and so that as a group we can serve them on a live basis. Together with that, we also are now at initial stage of exploring how can we homogenize our ERP across different geographies, which was not the case earlier. And to that extent, we are currently working with again a global vendor, with to evaluate the best in class ERP software. Go ahead. This is very exciting on what you see out there. This is a picture of our Malaysia factory. As you can see, when it comes to embracing renewable energy, we leave no stone unturned. We stretch our limits or push our limits to place, to embrace renewable energy to the maximum. We did that by taking every inch of the roof to put our solar panels, and also using the car's parking space to put the solar panels today. And the result of this is now in front of us. We have now managed to have 10% of our energy requirements in Malaysia catered through by this solar powered panels. And this is great in a rising inflationary cost environment. It has not only reduced down our energy bill in absolute terms, but it is also the right step towards furthering our sustainability goals. So it adds to the reduction of the carbon footprint, at the same time also saving on the energy cost. Go ahead. This is how we see our sustainability roadmap going forward. I think the important part here is we would want to replicate what we did in Malaysia. Today, our idea is to aim to get 100% of our plants to be powered by solar energy, unless and until there are regulatory and structural restrictions. And at the same time, we are also working towards coming out with our first sustainability report, target to get ourselves included in the THSI index, amongst other things. Go ahead. And equal emphasis that we play on transparency, accountability, and to that extent, another important development was to make a sustainability committee chaired by independent directors and get ourselves declared on the Coalition Against Corruption, CSE. Go ahead. I think coming to financials, go ahead. So this is a very self-explanatory chart. You can see we believe in long-term value creation, and this is something we have done through a very strong growth in EBITDA at almost 30%, year-on-year growth that we have been able to bring forth. And this is what gives us also that title of the Asia's fastest growing packaging company. And you see this growth translating into all important metrics of revenue, EBITDA, and EPS. Go ahead. Specifically talking about FY23, I think the key message that you should all take away is we delivered yet again a very strong year with almost a 22% growth in EBITDA and a core EPS jump of 50%. This is coming with also a very strong, I would say, an ROE profile of 20% plus. Our net debt to equity is at 1x level, which gives us a lot of comfort on the balance sheet headroom to be able to do investments both organically and inorganically, which I'll talk about further. So all of this growth that we did came in with a balance sheet also improving from its starting levels of 1.2x to almost now 1x at the end of this year. Go ahead. Q4, I think some of you would have seen that it moderated a bit, but I think it is only fair to appreciate that that moderation happened against Q3, which happened to be the record quarter in the history of TPAC. Now, as much as we would want to continue to be able to grow our profits on a quarter-on-quarter basis. It's not practically possible. So what we would want to highlight here is that Q4 was more moderated also because of some volume impact that we faced in some certain geographies. But nevertheless, from an overall perspective, I would say that we still remain very confident and bullish on being able to deliver value to our shareholders on a year-on-year basis. Yeah, we consciously did not stop any investments either into our balance sheet or into our P&L in any of the quarters. As we firmly believe in taking our calls from a long-term perspective. Go ahead. Very quickly, I guess some of you guys had certain queries. We received certain questions also on why and what led suddenly the freight expense, the selling expenses to go up from a Q3 to a Q4. We want to just highlight that this is basically a reclassification of some of the freight expenses which used to sit and get netted off in the sales, which now we have brought into the selling expenses on behest of our auditors who did this classification. It's roughly around 32 odd million of those freight expenses. This adjustment is EBITDA neutral and structurally the cost structure of the company has not changed, is what we wanted to give you as a key message. Go ahead. This is important because we believe that profits have no meaning unless and until they get translated into a solid cash flow, and that's what our business has been. We have been able to convert almost 75 to 85% of our EBITDA into our operating cash flow, and this is what helps us sustain the growth momentum by being able to invest this cash back into either capex or inorganic investments. Go ahead. I think the message here is that we used to roughly spend around 30 to 35% of our EBITDA into organic capex. Earlier, 2 years back, the last 2 years have seen increased organic investment, increase in capex intensity to almost levels of 45-50%, and this is now leaving us as we start our 2024 with a great infrastructure in place, a capacity that needs to be filled in, and also a lot of investment that has gone into people and resources. So it's a very I would say enviable position to be in, with a lot of investments already being done, and balance sheet still remaining comfortable for us to take more aggressive and bolder steps towards acquiring new companies, and a lot that can be done on existing infrastructure and capacities to grow the volumes. Go ahead. Yeah, I think this I have already spoken about, right? We did a lot of investments. 50% of that EBITDA went into capex, but still you can see our debt to equity has further come down. The jump that you see from Q3 to Q4 is not on account of our debt going up or so. It's basically our equity coming down more from the forex exchange fluctuation, but on a net level we did add profits to our equity of almost around 100 million Thai baht. And just leaving you with the final summary, and then we can open the floor for questions. We remain very optimistic on how the growth that we have delivered in past to sustain that growth for future. We also do believe that a very strong capex investment cycle has gone through in the last 2 years, and now is the time to capitalize on those investments in the coming year and year following it. A strong cash flow generation is what we expect, which will, with a lower capex intensity because of the investments we have already done, which may actually allow us to either repay the debt or basically use that to further grow inorganically, and which is where I say that our company's focus on M&A is continuing to be there. And the new platform that we created on new segments through in India or entry into new geographies like Philippines are definitely going to be foundations for future growth in times to come. So I think with that, I would like to end the initial commentary. Thank you so much for your patience. I think we would like to take this opportunity to thank you once again for coming over and attending this digital roadshow. We thank you for your continued interest. We would uh, we can reinforce the part that today TPAC is by far the Asia's fastest growing packaging company, and this is a title that we, with all humility, would like to retain in the next 5 to 10 years also. Please keep a close watch on our developments. We will keep on appraising you every quarter, and we are also happy to take any questions or any meetings if required, and if any investor would like to connect with us. Thank you so much. Swadika.
This session has come to the end. Thank you very much, investor and corporate, for joining the conference. If you do need further details, please feel free to drop us an email. ขอบคุณครับ
ครับ